Let's see if this works now.
Sunset falling on the news so slow, where the train went home and the stories flow. From Tryon Palace to the streets we roam. Yeah, this place ain't just a town, it's home. Yeah. This is a golden hour, where the light hits right, where new burn shines in that coastal light. Every voice, every story, every dream out loud. Yeah, we're lifting up this city proud. This is a golden hour. Well, Lenee golden. Yeah.
It's so fun me trying to figure out all the things on here right now. But hey, everybody. I am Lenee Golden, and I am so excited that you are here today. I just want to make sure I said 50 times, but that you guys can hear me okay. I don't need to turn it up or anything. Obviously, I just turned it on my phone to see if you guys said anything, and now it's a little delayed. So, but happy Wednesday. I hope you're good. Today, we are going to have a good friend of mine. It's funny. It's been 1 week since I did this, and I feel like I'm starting brand new all over again because there's so many buttons to click, and I feel like I'm just messing the whole thing up. So y'all just bear with me on here. But today we have Nikki Rogers with us. Hey, Nikki.
Hi guys, can you hear me?
Yes, I can. Can you guys hear her? Erin, are you watching? Can you hear her okay? I can hear her, so I'm going to assume that yes.
Okay, good.
You are great. How are you today?
I'm good. How are you?
I am good. I'll be honest, I had a little bit of a panic attack when I couldn't get a hold of you, and I thought I was going to have to fake it.
I was next door and I told them I was like, I have to be done at 5 minutes before 12. So I like ran back over here. But yeah.
Yes, that is amazing. So no, I'm great now that people can hear us, that it went live. I went live on time. I was so proud. I was like, oh, I got my 5 minute countdown. And Aaron was like, it's not there. I'm like, it was showing here. He goes, you're on private. I was like, oh, I did not make it where people could see us. So this is a learning curve for me, especially. And, you know, I guess I've just got to that point in my life. My kids make fun of me all the time. I'm the old person that can't do all the technical things that I used to be able to do. And so that's a little humbling right now.
I understand.
Yes.
100%.
Okay. So basically I want to make this as it's just you and me today talking
Mhm.
about lending, and you are just so knowledgeable about the topic. And I've told everybody that this is not just for buyers, not just for new, never purchased before, brand new homeowners, nothing along those lines. But what I really just want to start with is introducing you, Nikki. Who are you? Tell us a little bit about yourself.
So I am Nikki Rogers. I run a team of mortgage lending ladies. We call the team Team Nikki Rogers. I if I could change anything and go back, probably that would be the first thing I would change. It does feel weird saying, I'm Nikki Rogers with Team Nikki Rogers. Um,
You're the
so
important one,
yes,
is what it sounds like.
yeah. So, well, I call myself the top of the pyramid, and I'm a bit of a squirrel. And then I have all these wonderful, you can see Lily behind me, all these wonderful ladies that are help me and keep me tamed. And they all have their specialties. But yeah, that's me.
Awesome. So, how did you get started in this business? What made you be like, wow, I'm really good at this? Like, what got you in here?
Yeah. So, honestly, my mom has been in the mortgage industry most of my life, and I was always a person who wanted to work. Like, I wanted to make money. I had my worker's permit at 14. And so when I graduated college, I actually got an internship with the company that my mom was working with doing a loan setup. Fun fact, I was only 17. My birthday's in July. Um, so yes, I tell everybody I set up my first loan before my 17th birthday.
That's
So
amazing,
that's how I got
actually.
into it. Yeah, yeah. But then I came back every summer during college and did a different piece of the puzzle in the process. And then when I graduated with my finance degree, I started in investments, moved to all things banking, and back into only mortgage full time in 2012. And that's when I came here to Eastern North Carolina. So I've been doing only mortgage as my sole uh, source of income, I would say, or my sole product since then. And then started building the team in 2017. So we are in our 10th year. So it's exciting.
Where'd you move from?
Northern Virginia.
Oh, why'd you come here? Just curious.
So when I graduated, it was '07, and the market had already started. Like, it started in '06, and the market was really just not in a good place. And when I graduated, they were severancing a lot of people out. They were closing subprime lenders, and the banking industry as a whole was taking a pretty big hit. So I went into investments, hated it,
Mm.
hated it. And so then I worked in banking for about 2 years, and I woke up one day and was like, I'm going to be 25 this summer and I'm not fulfilled.
Mm.
So I decided at that point, it was '08, that I was going to go back to school. And my parents had a beach house in OBX,
Hmm.
and my best friend in college went to ECU. And so I was familiar with North Carolina. So I applied at business, MBA, and law school within the state of Virginia and North Carolina and Maryland, because I wanted to have an adventure, but I wanted to be able to get home, drive home. And I never thought that I was going to permanently move. I just wanted to go somewhere for 2 years and live my best life as a young single person.
Right.
So ECU, I ended up picking ECU for business school. And really, that was because everybody was going to law school at that time, trying to figure out new careers.
Mm.
And then additionally, they waived my first year of the master's program courses because of the grades I got on my finance degree. So they were overlapping. So I only had 1 year to get my master's, and I was familiar with ECU, straight up 95. So that's what originally brought me here in 2010. But then I met my husband that summer, and I stayed.
They have a tendency to do that, don't they? Like, I planned to come here for a couple years too and met mine, and
Yeah,
here we
there
are
you are.
a very long time later. So I
Yep.
get that completely. Well, what is something people always misunderstand what a lender actually does? What is something you would say to them, like in their mind, oh, you give us money, but how would you describe it?
Yes. So most people just look at the lender as the person who gives you the money. And that is a simple answer. But as a lender, our job really is being a risk manager. And I say that because what most people don't understand is we have a legal obligation to ensure that the borrower has a net tangible benefit, right? Which
What is
means
that?
that by this purchase that they're getting something of value.
Hmm.
So when you're purchasing, you're getting the house. Now you'll see those same parameters on refinancing, and that net tangible benefit for that is either lowering their payment or getting cash out of their equity. And what it does is it keeps people from churning loans for money. So this rule kind of got put in place after the collapse.
Right.
And so now we are legally obligated to make sure that we do our fiduciary responsibility. And that basically means we're not being nosy. We just need to make sure that the client doesn't end up in a financial hardship and that they couldn't make the payment.
Mm.
And that's something we saw pre '06 to '08 was that people weren't able to make their payments because they were getting loans that were interest only, for example, or balloons where you make a small payment for 4 years and then all of a sudden you owe $200,000.
Mm-hmm.
So part of when they recreated our industry, the government came in and said, hey, you're risk managers, you're licensed, you have fiduciary responsibility to make sure that the borrower has the ability to repay and that they have a net tangible benefit.
Mm-hmm.
So at the end of the day, I think that's the biggest piece. We're not just like, here, come to me for the money. Yes, you come to me to get the money, but then what does that look like? And that's why it's a 30-day process. Sometimes faster. We've done it in 15. But there's a process because we have to then do our due diligence.
Mm-hmm. Yeah. So in other words, you're not just looking up yourself in the whole thing either.
Oh,
It's for
absolutely
the
not.
protection of your clients so that you're not going to put them in a situation that they will fail. Um, and
It
that's,
also is protecting our economy
mm-hmm. Yeah.
because that's how it all got started. And so our responsibility is protecting the lender's funds, protecting the borrower from being in a horrible financially crippling situation. But then
Mm-hmm.
that again, it starts to roll downhill, and then what you see next is banking collapses, and so all of this is to protect everything from our world economy down to the borrower.
Mm-hmm. Yeah, I love that. Well, speaking of the economy and everything that is going on right now, it's all special time. And if anybody watches the news, it's a very scary time. So, what is your current vibe on the market, your 2 cents from your perspective as a lender right now? Give me your 2 cents on that.
Okay, so what I would call the vibe right now, I'm going to go local to our area. And the
Mhm.
biggest piece of this is we live in a very insulated area. So our pool of buyers and sellers is unlike most of America. So we're not going to want to focus on America's numbers, right? Or even the state numbers. We're going to want to focus on Eastern North Carolina, and we can even go down into New Bern, Craven, just our surrounding areas. And what we're seeing is just a shift towards a balanced market.
Mhm.
And what that means is the bidding war era has completely faded out, right? Well, not completely, but mostly faded out.
Mhm.
And it's been replaced with a climate where both parties have more room to breathe and negotiate through the transaction. So that's really the vibe going on is excitement because more people are in the game.
Mhm.
And so, what it's giving you, also giving you that negotiating power. So buyers are have an ability to ask for example, seller concessions, home warranties. So it doesn't the vibe while everyone is focused on, oh, the rate is not a 3%. Newsflash, it's never going to be again unless we are in serious economic issues. We don't want that. So instead of focusing on that, what we need to focus on is that now we have the ability for so many people to get in the game to buy their first home and build equity and create their legacy. So, I believe what you focus on expands. And so most of the things I listen to and I focus on is how is this market currently good for our buyers and how can we support them in that. And
Mhm.
so I'll tell you, the vibe I'm seeing is that we're people that have been sitting on the fence who could not purchase because they didn't have the cash power that have been paying rent are now able to own their first home. Like that's awesome.
Mhm. Okay, well, that's a perfect transition to what I really want you to hit on this is what are available to buyers right now. So there's so many programs that you guys have educated me on over the past couple
Mhm.
years for sure. Such as down payment assistance, that type of thing, where they think they need. I would say one of the biggest myths I hear on a regular basis as an agent is, well, I don't have 20% to put down. So, what are
Yes.
some exciting things that we can
Yeah.
educate
Yeah.
people on for buyers right now?
Right. So first and foremost, you do not need 20% to buy a house.
Say that again.
20, you do not need 20% to buy the house,
Woo!
period. Woo. So I think the biggest misconception is that people forget that there's multiple different loan programs. So you have conventional, which people assume is 20% down. It is not. It just, if you put 20% down, you avoid mortgage insurance, which is a part of your payment, but it is minimal.
Mm-hmm.
So you could put as low as 3% down on a conventional loan if you're a first time home buyer.
Mm-hmm.
We also have FHA, which is 3.5% down. We have USDA, which is zero down, and VA, that is zero down. And VA, specifically in our market, probably encompasses 40% of the business. So 40% know right out the gate they don't have to put your money down. And then if you're a first time home buyer, we are in the great state of North Carolina, and we have this wonderful program. It's called Down Payment Assistance. And if you meet the parameters, which I'm happy to go through, essentially the state, it's a state funded, well, it's a state funded raised money program. It's a non for profit where they assist the buyer by giving them at the closing table $15,000 towards the transaction. So, for example, if you're buying a $250,000 house and your down payment would then be 8,750, right? And you
Mm-hmm.
got 15, it's going to cover all that. So now you're not bringing that money to the table, and then you have left over you have about 6,250. And when you have closing costs that actually come into this transaction, you have to pay some money for your closing. It will cover all, if not most of it. So
Mm-hmm.
not only are you now in a position where you're not having to bring all this money to the table, but you're also able to set up a competitive offer. So I will tell you, I would say 50% of the loans we're doing are North Carolina Housing down payment assistance.
So my next question on that, with that $15,000 is a lot, and like you said, it will cover your closing costs, all the good stuff, so where you can just basically move into a house. But then I have 15,000 more to pay back. Like, what happens to that $15,000? Is it another
That's a really good question. Yeah. So, like I said, this program was not set up for people to profit. So I had to put some parameters around it. The first thing I want you to know is that the $15,000 is a essentially it's called a silent second loan.
Mm-hmm.
It is zero interest and zero payment. That's why it's silent. So essentially, what it is you have your first mortgage that you got. We'll go with FHA, right? And then the 15K comes behind it, and there's two liens put on the property at closing. The 15,000 that has just been sitting out there silently, um, the, again, is not for you to profit off of. So
Mm-hmm.
what they've done is they've created a model where a course of 15 years, it will become fully forgiven. But at year 10, when you reach 10 milestone, they forgive 20% of it, and then 20% in year 11, and 12, and 13, and then it's fully forgiven. And so that's as far as how the program is designed. But the bottom line is we don't want to be having clients who buy a house and 2 years later sell it and then pocket that money, or the
Right.
program would die.
Mm-hmm.
And that money that you pay back goes back into the pool. But I have good news for you. So I actually was digging into this yesterday and ran some numbers, and this is based on a $250,000 purchase. And the appreciation in Craven County for 2 years right now has consistently been the average is 8.1%. Okay. So average. And then if you go to yearly growth of appreciation of houses, it's anywhere between 3.3 and 4.3 over the last 2 years. So I did some math and I said, okay, what's right in the middle? Let's do 4% moderate growth, right? That means that the house is going to be worth, right, that much more in percentage than when you bought it.
Right.
And so that means if you bought it for 250 today, the value is going to be somewhere between 267 to 272 based on the math. We'll go with 270 in the middle. That means that when you go to sell your house, you've already profited 5,000 because there's 20 in equity. You pay the 15 back with your payoff, and you're walking away with 5,000. So what I want you to hear is that the state funded program is giving you money to get into a house for zero to very little cost. and use letting you invest in yourself, and you're making money off of a free pot, right?
Right. So you're not out anything essentially.
No. The
What it
only
boils
I've
down.
seen, I've been doing this program for years and years and years, and the only times that I've seen them be out is if it's they bought a house and something catastrophic happened, and they have to sell, 6 months from now very quickly. And so usually when those cases happen, and again, I've seen it like one time. The listing agent, the buyer, us, we come up with a plan to market the property and help them so that they can get as close to just netting zero as possible in those cases.
Right, right. Does that like can a VA person qualify for that too to help with closing costs or something like so it'll attach
Yes,
to any loan. It doesn't have to be a specific type.
correct.
That's all.
It partners with the four main loan types. So we originate the loan, conventional VA, FHA, USDA, like we would normally do, and then we come behind it and we essentially send North Carolina documentation to prove that they're meeting the parameters of the program, and
Hmm.
then they give us what's called a commitment, and essentially we get that commitment letter and we go to closing, and that's where the 15,000 is waiting with the attorney to assist with any costs of the first lien.
That's awesome. So I know there's like different parameters for it, and that's something you can
Mhm.
go one on one with buyers and whatnot. But like a general
Mhm.
question, do you have to be low income to qualify? Lower income.
No,
Thank you.
no.
Okay, that's
There
just
is,
I
yeah,
both.
income brackets. There are, but I will tell you, it's also based on how many people are in the household. So say that you're a family of three, the max income is 122 in
Okay,
Craven.
yeah, and that's
So that's not low income.
yeah,
What we consider low income is 60% of the median average, and that's significantly less than
yeah.
this. So no.
Well, you already kind of answered this, but I want to push on it a little more. But if someone is using the down payment assistance program, is that something that's disclosed and non-competitive or anything to people, or does it make them more competitive in the situation of,
Oh,
you
it
know,
makes it hands down more competitive. And here's the reason why. So when, as Lenee can tell you, when she lists the house, she's going to give the seller what's called a net sheet. So you're gonna have your sales price, and then you're gonna have any costs associated with that, that you could think to have that are fixed costs,
mhm,
maybe some repairs, and other items. But something that is now back in the market that a seller can offer is called seller concessions towards buyers' closing costs.
mhm,
So what you're seeing is that first time home buyers, A, may need a down payment, and then they need the 7,000 in closing cost. So if you have our buyer who is getting the money, we offer 250 but no closing costs, right?
mhm.
And then the next person offers even 252, highest and best 252, but 7,000 in closing costs. That net number is still 5,000 less. Our buyer will win the deal.
Mhm.
There's very it allows our buyers to not have to ask for so much from the seller, and quite frankly, it's where they get the money from for their down payment and their closing cost is something that we verify
Mhm.
regardless of where it comes from.
Right.
But if anything, it makes them more competitive, not the other way around.
That's awesome. So the people, and this is something like honestly, I don't remember. So, is it only for first time home buyers, or can anybody now qualify for it?
Okay, the rule is first time home buyers or active duty service members.
Oh, awesome.
But let's define what a first time home buyer
That was my next question.
is. So, a first time home buyer is, for tax purposes, someone who has not resided and owned their primary residence in the last 3 years. So, the easy one is I lived in Florida. I was moving to the area. I couldn't find a house I liked because it was in the pandemic time. So we rented and I sold it, more than 3 years ago. You are now a new first time home buyer. The also exception in that, if you heard me say it, was occupy.
Residing.
So say that you were in Florida and you couldn't sell your house and you had to rent it. And then you came here and rented for 3 years.
Hmm.
You're a first time home buyer again
Okay.
because we're following what the tax code says, and that's what the tax code says. And so I actually just closed one last week where the client owned a property. Her and her spouse bought a property together 10 years ago. They separated 4 years ago. He retained the property, but she's been renting for 4 years.
Hmm.
And her and her children got this program, and she came to the table with zero money. In fact, she got her deposits back.
Wow. That's awesome. Yeah, that was
Mhm.
my question
Yeah.
too. Residing. So, in other words, if somebody owned their house, has owned it for 20 years and been living in it, they wouldn't
Hmm.
qualify to go buy another house, right? Because they've been in that house for that period of time.
Yes, for that program. Correct.
Okay. I just making
And
sure of that.
typically, and yeah, yeah. And so if you think about it, big picture, it's more about like financial ability.
Mhm.
Again, the program is there to encourage people who cannot purchase without funds to buy homes, which quite frankly just makes better neighbors.
Mhm.
So if someone already owns a home, again, we know they've got a significant probably amount of equity,
Mhm.
right? And or probably the ability to put more down. So it's more when you think about that big picture, the reason these rules are in place is because we always have to go back to the mission of the program.
Right. I mean, that makes sense. Complete sense. Switching gears just a little bit.
Hmm.
So one thing that I'm actually seeing a lot of now is credit issues. And people who don't have the best credit score. But then on the other extreme, I've had people, buyers who have not bought ever, or it's just been a very long time since they've done the process, asking, well, my credit score is like 790. Is that bad? And so my question is credit scores, where realistically, what is doable? Where is, I don't want to say like the minimum credit score, you could answer that way,
Mm,
whatever you see fit kind of thing. But um, I think people just really have a misconception on credit scores and what that looks like and what would qualify them.
yes, so I completely agree. I would say to me, this is like you, it's the biggest misconception out there, and the topic is a bit complicated.
Hmm.
So it's not about minimum credit score. That's what people focus on because that's what the rule book says. But
Hmm.
the credit score impacts a tremendous amount of things. And so when you can have a 580 credit score technically and get approved for a VA loan. However, you have a much more tight parameters, meaning you have to have extra money in the bank after closing. You have to have lower debt to income ratios. You have to verify a rental. There's more conditions that are put on the file with lower credit scores. Okay, so it kind of bothers me a little bit that everybody's like, what's the minimum credit score? Because
Right.
typically speaking, the minimum credit score isn't going to what we call auto approve. And if
Hmm.
your loan doesn't auto approve in the system, an underwriter has to manually underwrite it, and then they layer it with extra conditions because the risk is greater.
Hmm.
So what I want people, I would love for people to get off of what does my credit score need to be and more focused on how can I make my credit score as great as possible so I have more flexibility in purchasing power and more flexibility in program options. And so, I agree. I'll have someone who thinks I have terrible credit and I pull it, it's a 760. I'm like, you're the top tier
Yes.
golden. And someone say, oh yeah, I pay all my bills on time, everything's great. And they're a 610 because they utilize their credit cards too much.
Hmm.
But then we're going to keep going. The first thing I'm going to do, regardless if you qualify with that score, I'm going to show you how to get your credit score to higher.
Hmm.
So another example, I had a client that was utilizing only had one credit card. It was really small. I think it was like $500, and they maxed it out and paid it off every month. But the credit report was showing it as 100% utilized. So the
Hmm.
score was in the low sixes. Where I ran the algorithm, if they paid it down to $10, because you want to have a little bit of balance, their score went to like 689
It's crazy.
overnight. So not only did it open up with the programs, lowered the amount of conditions, increased the buying power, it also heavily affects your interest rate.
Mm.
So you can have the same parameters, but one client has a 740 credit score and someone has a 680 credit score on conventional, and they're going to get a very different rate.
Mm-hmm.
So it's so much bigger than that. The goal needs to be, how do I put myself in the best financial picture through my credit report so that I can capitalize on all these other things. And quite frankly, that's my favorite part of my job, because that is something that we didn't get. We knew how to dissect a frog, but we didn't know what a credit score meant when we graduated high school,
Yeah,
right?
for sure.
And most of it is not that they have bad spending habits. It's most 9 out of 10 times it's lack of education and not understanding how the algorithm works. So again, also, um, someone will come to me and maybe they have a 400 score. It's never no, it's win. So I
Right.
have the ability to build them a credit map so that they can get to where they need to. The only hard and fast rule is North Carolina Housing Down Payment Assistance. You must have a 640 credit score. But if you pay your bills on time and you're below a 640, we can very easily work with those numbers to help you increase that score. So I don't, that's the other thing. I don't want someone to say, I looked at my Credit Karma and I have a 636. I can't do it. Also, the mortgage algorithm is completely different than Credit Karma.
Mm-hmm.
So it's really just working. If you know you want to buy a house right now today, it doesn't matter what your credit score is right now, because regardless, we're going to show you how to make it better to
Mm-hmm.
open up those tools.
Yeah, that's awesome. Because even, I mean, I've been doing this for 15 years and I am still learning all kinds of things, especially from you guys and all the details. I had a question and it like totally left me, but we were talking about that. Um, so like that was that's what my question was. One of the questions that came back that I sent you was what's better, credit score, income, or debt? But one thing that I was I even as and at this point this was like 6 7 years ago talking we were going to actually purchase our first house finally personally, and I didn't think I'd qualify. I'd have to do this, I'd have to do that. In my mind I was going to have to pay this off, I was going to have to pay that off, I was going to have to, and I called and it was like no, you qualify right now. And in my mind logically it made no sense. But can you explain what debt to ratio income
Mm-hmm.
into income ratio is? I can do
Yes, yes. So the
what that means and what you guys
uh-huh,
are looking at on that, because like I said, I had been doing this for 10 years but I hadn't done the process myself,
mm-hmm,
and in my mind it was you were looking at how much debt I had, like the amounts versus what I was making. So can you
mm-hmm.
like tell us what that
Yeah,
is?
yeah. So I'll just quickly answer the first question though. What matters more? They all matter, but credit
Mhm.
score is always going to lead it, because the credit score is going to dictate income and debt. So if you have a better credit score, you can have a higher ratio. And what goes into the ratio? So what you're going to do is we are analyzing your debts that are on your credit report.
Mhm.
And if you have any other like installment things that are hitting your bank account, such as child support would go into that. Owning a second property, if there was taxes with that, those would go into the debts. But primarily what we see on your credit report. And then we're going to take your income, but we're going to take your gross income, not your net. And
Mhm.
that's where people get confused.
Mm.
So what they'll do is you're going to take your total debts and divide it by your gross income. And so if someone hears, oh, okay, I've got $3,000 in debt and I bring home 6,000, that's
Mhm.
50%. That doesn't make sense.
Right.
But your actual gross was 10,
Mhm.
right? We're using actually that number 10. So it's 3 divided by 10,000, which is 30%. That
Mhm.
qualifies. So it is the gross income that you make versus the debts that you have on your credit report. And truly, so there's things that people choose to pay monthly.
Mhm.
That's your choice, like a gym membership, things that you can cancel or you're not obligated. We're not going to include that in there. Where we see the most things that we add to it is child support and owning other properties.
Okay.
Does that
Yeah.
does that answer
Yeah.
the question?
Yeah, yeah, it does. Significantly. And do you look at like what your payments are, or do you look at what the total debt is? or both,
So
obviously.
both. So there's two ratios. The first one's called front end ratio, which is the housing ratio, and that does take into consideration. There's flexibility around that, but they like to see it anywhere between 29 to the high 30s, 37, 38 kind of range. But the total debt, that max number is a hard and fast rule. So
Mm-hmm.
you're taking all of your debts and what your housing payment's going to be, and that's really what we focus on, um, because that is the output. And
Mm-hmm.
everybody lives their life differently. Not everybody has an Escalade, right? There are some clients that drive used cars they're paid for, don't utilize many credit cards. So they have the funds available to invest in a bigger home because that's their choice of where they're putting their money. So
Mm-hmm.
that back end ratio that we call total debt ratio is really the biggest thing we focus on. There are some programs, very rare, where we need to also make sure that that front end aligns with their budgeting.
Mm-hmm.
But it's rare that that is the sole focus. Generally speaking, it's about their total debts. And the great thing is too is we talk about that with the client. So we talk about that. You know, you make this. This is what you're currently paying, and this is what's adding to it. And then we'll say, hey, you have $7,000 in savings, but you qualify for down payment assistance. Why don't we pay off these credit cards, right?
Mm-hmm.
And we use down payment assistance, and
Right.
then your total debts are going to change. So that's part of the conversation of like financial literacy and budgeting and really the total output of the household.
Yeah, that's awesome. If someone is wanting to buy a house, how
Mhm.
far in advance would you say they need to contact their lender before even entertaining anything?
The minute they think about it,
Instantly, right? Like, don't
instantly.
find a house first.
Yeah, yes, do not. And because you really don't know what you don't know. And most people do not know what their mortgage credit FICO algorithm is, right? And I just said that credit's the most important. So if you are thinking about it in the next 6 months, 2 years, 3 years, you need to get in front of that.
Mm-hmm.
And what'll happen is you need to have a conversation. Let me look at your credit, and then I'm going to give you tips of the trade. Whether you have again a 490 or a 700, I'm going to put you in the best financial picture so that you get the best interest rate with the best programs with the most buying power. And so that credit, some can be what we call not even fixed. I don't even call it fixed, but essentially increased, or utilizing your financial picture with your credit, usually in 30 to 60 days.
Mm-hmm.
However, there are other folks that it's going to take a year for a late to fall off, or they one I see a lot is student loans going into default.
Mm-hmm.
When student loans go into default, it's considered a federal debt, and they
Mm-hmm.
put you on this naughty list, and you have to basically, even if you make a small payment for 4 months before they take you off the naughty list,
Mm-hmm.
right?
Right.
So I'll have someone that comes to me and says, I have a 680 credit score. I'm ready to buy. I've been monitoring my credit for 2 years. I've been saving my money. I know what I'm going to do. I'm going to get an FHA loan. And we pull credit, and there is student loans in collections.
Ugh.
They can't. So again, there's so much to this piece. And then you go into income and debts, right? Because then you have to qualify with the payment.
Mm-hmm.
That also gives us an opportunity to make sure that you understand maybe you have to pay some things off. What does that time look like?
Mm-hmm.
Do you expect to have a raise? And then we can also back into what house you would qualify today for, and the amount, and where the future is. And that happens frequently, where someone will say, hey, I'm going to be coming to the area in the next year. I'm hoping to move this summer. I want to get started. I just want you to look at some things. And
Mm-hmm.
I'll call and say, you meet all the criteria, but you have too much debt going on.
Mm-hmm.
And then they'll say, okay, well, I think I can pay off X, Y, and Z in 6 months.
Mm-hmm.
Fantastic. Not only is your credit score going to go up, but then you've opened up that buying power. It also, when people are moving to different areas, the income is a big piece of
Mm-hmm.
that. We have clients that will come from Northern Virginia or New York or California, where they have much higher pay,
Mm-hmm.
And they'll go online and they'll put that pay in, and an online lender will spit out a letter that says you can buy a house. But
Mm-hmm.
the income that they're going to make here is what we use to qualify. So you need to know what your budget is with the income you're going to make when you live here. And then you go a step further, if someone's retiring, that income brought into the household is much less than when they're working, because ideally, if you played your cards right, you'll have paid off more debt, and so
Mm-hmm.
you need to take less money, but it may not meet the numbers.
Yeah.
So having that conversation, I think as soon as possible is super important. And then the last example I give is business owners.
Mm-hmm.
So we qualify you based on your taxable income,
Mm-hmm.
not your gross for business owners. Okay.
Thanks.
And that's the opposite of W 2.
Yes.
And that's because, so what you tell the IRS you make is what we qualify you on. So
Mm-hmm.
if you're a W 2 employee, they have withheld taxes, but at the end of the day, you're still claiming the income you made in gross, which is why a lot of people get a return because the numbers shake out. But businesses, the government relies on you to tell them what you actually brought in and what your expenses were and what your profit is.
Mm-hmm.
So I say it's extremely important if you're a business owner, and even if it's 2 years from now, for us to have a conversation so we can make sure that your income is reporting that will support buying a house
Yes.
versus writing everything off.
Everything.
That's another example.
Yeah, that's always hurtful when you know somebody's had a great successful year and then you try
Mm-hmm.
to get them qualified and they've written off pretty much everything showing they didn't make near enough money.
Mm-hmm.
It's not fun having to have that conversation.
Not
What
right.
is something, and you might have already hit on it, might already have been a topic of conversation, but something that you wish every buyer knew before they even began the process?
I would say I wish that every buyer knew that more people are pleasantly surprised that they qualify than don't.
Mm-hmm.
So this fear of not qualifying, that, I mean, we just have it as humans, usually is not warranted.
Mm-hmm.
So that's the first thing. More times we are telling someone yes than we're telling them no, and mainly we don't really ever tell anyone no either.
Mm-hmm.
For us, it's not a no, it's a win. Like, when
Mm-hmm.
are you able to purchase? And so, and lastly, there's a program for everybody. We're just going to help you get there. How do we create the process so that we can get it there? Can you hear me?
No, you're good. Yeah,
Sorry.
you're good. You're working. You're supposed to be. I can still hear you. You're fine.
Okay, good, good. So that's the biggest thing, is that's it's there's a program for everybody. It's just, how are we going to get there?
Hmm. And so that's something too. Even we bought one house and then we ended up moving and we had two processes. And every time I do this for a living, I lead people by the hand on the process and I'm still panicking as soon as this is going to be so complex. It's going to be so hard. So tell us how simple it truly is from first conversation to the application to closing. Like, what can they expect in that journey, because a lot of them have no idea, and I kind of go through it with them, but I know you'll be able to just so quickly just be able to give us a quick
Yeah.
synopsis.
So the bottom line is we're on their timeline, and it can be as quick as having a conversation in the afternoon, getting their application from them at night, and sending them a pre-approval letter the very next morning. Like, it can be that quick. It could also, if we have to have a bigger plan or have conversations, it's usually, with the initial conversation, we're going to immediately send you the application. Again, we're on your timeline, so when you finish it and get it back to us and get your documents, we're same day turnaround for having a conversation about what your financial picture looks like. And then it's kind of, you wait to find the perfect house. So the beginning piece of it is pretty quick, right? It can be as fast as your client is vested into getting it done. And then once you find the house, we typically, most most folks are under 30 days. You get to pick the closing date when you negotiate the offer.
Mm-hmm.
But we can close in as fast as, I've done an 11-day closing. Usually that's not enough time for you guys to do
Mm-hmm.
your due diligence of getting a home inspection and doing all the things that you and your buyers want to do with
Mm-hmm.
going around the house. So with what your timeline is and my timeline, I've seen typically, our average I think is 22 days,
Mm-hmm.
but I usually see 3 to 4 weeks and then they close. So it can be as fast as that. Again, it's based on the timeline.
Mm-hmm.
And then if it's a client that either isn't quite ready or hasn't found the right house, we just update their profile every 90 days.
Okay.
It's very simple. We just soft pull credit. So we just confirm that the credit looks the same. Again, it's 90 days. And then we just verbally say, okay, you're still the same place, job, cool. Let's update a pay stub. And that's it. It is simple, easy peasy to
Yeah.
keep it going and keeping it updated.
And nowadays, you can even just like a lot of the complex things, I think, from the buyer's side was getting pay stubs, getting bank
Mm-hmm.
statements, so on and so forth. But now it's all electronic, right? So you can just like essentially link your bank account just about,
Correct.
and it just does it for you. So you just sign
Uh-huh.
on, create an account, fill in some questions, and then
Mm-hmm.
you can very easily upload stuff. So it's no longer grabbing it, scanning it, meeting
Oh,
you,
yeah.
doing all the things. It's very much more streamlined as far as
I
that.
tell everyone it's like TurboTax, right? So it's as complicated as your situation is. It could take
Hmm.
you 7 minutes to fill it out. It could take you 20 minutes to fill it out.
Hmm.
But if you'll notice with TurboTax, you can go and log into your employer and the W 2 comes through.
Hmm.
Same thing. So I'll give you an example. ADP is one of those big payroll companies that links, those bigger payroll companies link to the application and pull it right in.
Hmm.
Same with all banking. So there again, there's very, very limited. Also, photo ID is a big one. You can take a picture with your phone and upload it.
Yeah.
So there is so many easy ways to assist getting all the documents. And if it is something that may you actually have to hand or not hand, but have to get a copy of that you
Yeah.
don't. The biggest example is tax returns. We ask for your CPA's information and we email them and copy you and say, hey, I'm working with Mr. and Mr. Smith. We need 3 years of their tax returns. They're copied on here. Please respond that you approve it. And then they will quickly send that over to us.
Yeah.
So financial advisors, investment accounts, if you're struggling in any way, we are here to help you get it as quick as possible.
Hmm.
So that's the best part about basically everything being online.
Yeah. I that made it so much easier for me for sure. Um, okay. I'm just gonna ask you like quick questions real quick as we
Mm-hmm.
wrap up. So, would you advise rent or buy right now?
Oh, bye.
Why?
I have never met anyone that regrets buying. They regret waiting. And the bottom line is this: when you're renting, you're paying 100% interest. You're not putting anything back into yourself. And we're fortunate to live in an area that has a 8.19% appreciation.
Hmm.
Regardless, if you should have bought yesterday.
Hmm.
Looking in the rearview mirror every time, you're like, man, I should have done it. Well,
Yeah.
you're gonna want to keep doing it. So
Yeah.
today,
Big house or better location?
location.
Mm, you've learned that recently, hadn't you?
I have. I can tell you
Fixed
all
rate.
about it. Location,
Fixed.
location, location.
It makes a difference, even if it's not the perfect house. Where
Mm-hmm,
do you want to
mm-hmm.
be? A fixed
Yep.
rate or adjustable? I know that one.
Fixed all day long. Right now, well, it has for a long time. Arms are not the arm rate and the fixed rate are not that much different for taking on a risk of your payment changing.
Hmm.
So fixed rate all day long.
Let's talk about fixed rate real quick. Just
Mm-hmm,
real quick. Um,
mm-hmm,
everybody's still saying all the things. Oh, I'm waiting for the rates to come down. Rates are so high. Blah, 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 blah. What are you currently seeing right now in this market rate wise? I know it depends, so on and so forth, but what would you say average?
mm-hmm. Yeah. So before our war, I guess we'll call it, or political situation, we were seeing a dip into the fives, and
Hmm.
that was exciting because we have had not seen that in a couple of years. We've been really hovering in these sixes, and had gotten all the way into the sevens.
Mm-hmm.
So, but right now it's kind of rebound because of the price of oil and the economic impact of it.
Mm-hmm.
So we're back in the sixes primarily, and I'm seeing everything from, depending, anything from, I don't know, 599 to 6.875. It just, there's so many things that
Fair.
differentiate. Yeah, so it's all over the place. But if we're talking, what these folks need to focus on is North Carolina housing, and they have a set rate,
Mm-hmm.
and it's 6.25 today.
Okay. What do you say to the people? Because I get this a lot. It's like, well, it's the rates are just so high, and 6% is really not that
No.
high if you're going to look at the historical numbers of things. So,
Hmm.
what is your response to somebody who's like, well, I'm going to wait because 6.25 is just too high?
I usually try to figure out if they already have a mortgage or they've just been on TikTok too much. So if they already have a mortgage and they're like, oh, I got 3%, I'm not going anywhere. And I'll
Hmm.
go, yeah, but your house is worth double what it was. So let's do the math. The
Hmm.
difference of the interest rate versus how much money you made from your house, the math ain't mathing, right? And
Yeah.
so that's a mindset. And
Hmm.
I will say there's a small pool of people that don't have to move, but maybe want to. It's more a want than a need, and that would be a factor into it. If they're fine where they are, they just feel like if the dream property would come up, okay, that's cool. That makes sense. But most people, that's not the case. And then the people that have not purchased a home, it's because TikTok and Instagram and their grandparents are telling them what was. Well, what was, we don't want to ever happen again.
Hmm.
A stable economy is 5 to 7%. We
Hmm.
want to be in the five. The best case scenario is I would call like a low five. That would be like, yes, money. However, at the same time, when rates go down, that means all these other people are jumping back in the market, which the prices of houses are going to skyrocket.
Hmm.
So you ask me if I want to take a 6% on a 250 or a 5% on 280,
Hmm.
I'm going to buy the lower priced house all day long.
Hmm.
Also, your interest is tax deductible depending on your tax situation. I'm not a tax advisor, but interest is something that goes to the bottom line of writing off. So usually it's just that they don't understand the math and the long term implications. And I've seen people with 3% sell their house, buy a bigger house, and have a less payment because they have so much equity in the house.
Yeah, and that's awesome. Um, okay, my last question, unless you want to add anything else, because that'll be it too. But if someone was watching right now and we're like, maybe someday I'd like to buy, what's their very first step with you?
Call me. It's as simple as if you think maybe sort of kinda want this to be a reality, you need to go ahead and get in front of the game now.
Hmm.
Solely so that you are put in the best financial picture to win the deal, meaning win the house that you have fallen in love with. And again, it is extremely frustrating for my clients when I tell them what their credit score is. And then they say, oh my goodness, if I had known that, I would have just paid that off.
Hmm.
So you need to start the minute you think of it because there's all these things that tips and trades and things we can help you to improve it. That quite frankly is a time factor.
Hmm.
So the more ahead of the game you are, the better off you'll be. And the only thing I would add is that if the one thing that people think they should do that I would say is the last on the list is saving money.
Mm. That was,
100%. That's the bottom of the list.
hmm.
You need money, more money on hand when everything else isn't in a good place.
Hmm.
So the higher the credit score, the less money you need. The higher the credit score, the better interest rates. So that even is costly.
Hmm.
And so the biggest thing to focus on is first it's credit, then talking about your income and your debts, and the last thing on the totem pole is about how much money you need because there are so many more programs that have very little down. And like we talked about, the market is stabilizing. So
Hmm.
that means we're seeing seller concessions too. So there's just so
Lots.
much more. That is not the we're not in the pandemic era anymore, and saving money is just that's not really a thing if you make.
Yeah, there's a lot of negotiations going on right now, and I've written more contracts with seller concessions, which is the seller helping the buyer in their closing cost assistance, and that also helps towards down payments and whatnot. So it's happening now. So, and there's less competition. So, like you said, there's no, I won't say no longer, because I've seen it occasionally, multiple offers, which drives the price higher. There's no longer high due diligence fees, so more money up
Mhm.
front is not really happening so much, which is the cash that you risk. It's a great time to buy now, because if the rates drop, everybody who's on the sidelines jumps in, and then you're back in this contest that many
Mhm.
people can't win. I mean, it's hard.
Well, the bottom line is you can change your interest rate. You can't change that what you pay for a house.
Mm-hmm.
That's non-negotiable. So get the house at the better price, and if rates drop, we'll refinance you like we did half of America in
Mm-hmm.
2000 and well, I mean even all the way in 12 we were refinancing because again we were in economic distress. But
Mm-hmm.
yeah, the purchase price is something you're not going to change
Mm-hmm.
ever.
You're stuck.
We can work with that rate.
Yeah. That's the last question we'll end on right here, actually, is do you only do new purchases?
No, 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 no,
No.
no. We do all purchases. So we do new homes. We do construction to permanent financing, meaning buying your lot and then building a house. We do home equity lines of credit. We do all forms of refinancing, which is getting money out of equity. It's called cash out. Rate term is strictly just lowering your rate or payment. Anything to do with a single family residence, we lend on. What we don't do is we do not do commercial financing. So we're not in the business of helping a business buy their next location.
Right.
But anything else, investment properties, second homes at the beach or the mountains, yes, we're all of that.
Awesome. And states, is it just North Carolina?
No. So we, as a company, can lend in all 50 states. I am licensed in Virginia, North Carolina, South Carolina, and Georgia, which means that we handle all of it, and it's process as usual. If, say, for example, they're moving to Alabama, I have folks on my team that are licensed. I still will do most of the work, right? And we
Hmm.
work in conjunction together to get it to the closing table.
Awesome. Awesome. Well, if anybody wants to get up with you, how can they do that?
So you can call us. We have a team line. It's 252-559-9373. We have email, which is team Nikki Rogers at lower.com. We have a Facebook that you can DM. We have Instagram. We have TikTok. You could Google, show up, smoke signals. Basically, you can find us.
Anyway.
Yes. Any way you want to
That's
find us,
perfect.
we're here for you.
You're amazing. Well, is there anything else you'd like to add that we did not hit on?
Um, I think we hit on most of it, but I just even just driving home that we are so lucky to live where we do that people want to be here. We have more people relocating than ever before. We have we're in between multiple VA bases. So what that means is the appreciation in our area is sky's the limit. We're
Mhm.
growing. We're not dying.
Right.
And so what I heard people ask when, well, I'm not sure yet, or, and the when is now because
Hmm.
it's only going to get better if you purchase now as far as what appreciation, meaning money back in your pocket. And just remember, every time you make that rent payment, you only get shelter for 30 days.
Right.
You don't get anything else back out of
Hmm.
it. So, yeah, if I could just encourage everybody to kind of get past those mindset and that what how important buying is, and that also what it does for you personally and how it makes you feel to own a piece of land. That's why we do what we do.
You're awesome. Well, thank you guys so much for you
Thank you.
and Lily in the background for joining us today. Yeah, wealth of information. I would highly encourage anybody who is considering buying to talk to her team. They are one of the most thinking outside of the box teams I have ever worked with. And in situations where I thought were impossible, they somehow or another found ways where I had one buyer utilize VA loans more than once. I had another one who was just absolutely no possible way that it was going to happen, and it happened. And so they are, they just problem solvers. Amazing problem solvers. So I highly encourage you guys to contact them. So I love you big, and I'm grateful for you guys.
Yes, love you too. And thank you so much for asking me to do this.
Yes.
It meant a lot to me. And
Oh,
if
really?
anybody has any other questions, just like I said, reach out to us. I have started a YouTube channel
Yeah.
like Lenee. We doing this thing together,
Working.
girl. Yes, and so there is a long form video that drops every week on, I believe it's Tuesday. I have a person for that, and then we have multiple shorts, and we are covering all the topics, all things lending, all things real estate. So, yeah, find me on YouTube, and if you want to peruse there and see what we've already got out there or need any information, yeah,
Awesome.
get back to us. Thank
Perfect.
you, Lenee.
Yeah, thank you. And everybody, you have a great day. We'll talk to you soon. See you next week.
Okay, bye.
Bye.
Sunset falling on the news so slow, where the train went home and the stories flow. From Tryon Palace to the streets we roam. Yeah, this place ain't just a town, it's home. Yeah. This is a golden hour, where the light hits right, where New Bern shines in that coastal light. Every voice, every story, every dream out loud. Yeah, we're lifting up this city proud. This is the golden hour. Well, Lenee Golden.